Hello and welcome to our discussion on accounting equation. In this session we will try to convert these transactions into an accounting equation. Accounting equation shows that at any point of time the sources are equal to assets. In other words, whenever there is an asset there has to be a source. So started business with cash 10,000. So capital and cash, the business has cash of 10,000, supported by the corresponding source, and the source is here capital. Capital is equal to cash. Avail 10% loan 40,000. So avail 10% loan 40,000 is another source, and to that extent the cash will increase and a corresponding source will arise. So the cash will now go up to 50,000, no change in the capital, and a new source, that is loan, will appear on the balance sheet, on the accounting equation, and the new source is loan 40,000. Purchase stock of goods for cash, purchase stock of goods for cash. So there is an stock, inventory, and the asset to that extent increases, and inventory is 25,000. and cash will reduce to the extent of 25,000. Cash will reduce to the extent of 25,000. No change in the capital and no change in the loan. We can see the totals of the equation also remains same. The next transaction shows the next transaction is purchase stock on credit. The purchase stock on credit, the stock will increase to the extent of 10,000. No change in cash, no change in capital, no change in loan, but we can see the difference in the totals. So there has to be another source, and the source is creditors or payables. The creditor is 10,000. Purchase plant on credit, another asset acquisition. So plant purchase is 30,000, and in this case also no change in the cash because there is no payment of cash, no change in the inventory, no change in the cash, no change in the capital, no change in loan, no change in creditor, but another source, the supplier of plant, X will be there on the accounting equation. We can see that total of the source is equal to the total of the assets. Now sold entire stock, with stock of 85,000. Sold entire stock, the stock becomes 0, and the sold the stock for cash of 50,000, so cash goes up. No change in plant and no change in the capital, no change in the loan, no change in the creditor, no change in X. So, but we can see that the totals of the sources side is not equal to the sources total of the asset side because of the profit involved in that. So the profit is equal to, in this case, the goods have been sold, 50,000 have been sold, entire stock has been sold, that is 25,000 minus 10,000. So the stock has been sold at a profit of 15,000. So therefore, whenever there is a change in the transactions, the transactions will affect the accounting equation in such a way that the sources will be equal to the assets. We can see that after every transaction, the totals of the sources are equal to the total of the assets. So that means after every transaction, S will be equal to A, because it affects the items in such a manner that the impact on the equation is same on source or the assets. So after every transaction, the S is equal to A. So that is why we started by saying that at any point of time, the assets of the firm will be equal to the sources of the firm, which can also be explained by showing as asset is equal to capital plus the profits plus the liabilities. Thank you very much.